Hey guys, how you doing? Just want to do a quick video on risk management and trade sizing. It really is one of the most fundamental basics of trading, but one I often get wrong myself, so I'm sure you guys get it wrong as well. It's always a good idea to risk small and be in it for the long term. It's so easy to get carried away and risk 2%, 5% per trade, and before you know it, you've had 2 or 3 losers and you're already down on your account size. And at that point, it takes a lot of trading to get back into a positive. My risk management strategy is to never risk more than 1% on any particular trade. No matter how good I think it is or how good I think I'm going to make a return, always stick to 1% risk on any trade. Many of my trades I risk much less than this, especially if I'm scaling into a trade or going back in after a break away from trading. So on a £10,000 account, for example, if you're risking 1%, your maximum loss would only be £100. If you relate that to the FTMO challenge, you're allowed to have a maximum 10% loss drawdown. So in that case, you're only allowed to have 10 losing trades. Now, most trading strategies I expect to not have 10 losses in a row, but it could occur. So to calculate your 1%, literally times by 0.01, really basic mathematics. And the same applies for 0.5% risk is times by 0.05, and therefore that gives you £50 per trade maximum loss. In my trading journal, I've got a very simple table that takes the equity amount at that particular point in time and works out 1%, 0.5%, and 0.25%. So I know at that point exactly what I'm going to risk on any trade. And these formulas are scalable for any account size. So, for example, if you're on a $100,000 account, 1% risk would be $1,000. Now, for me, if I encounter a series of losses, 2 or 3 as example, I would scale back on the 1% risk and go down to the 0.5% until my head is back in the game. So once we know how much money we're risking on any particular trade, we need to be able to equate that into trade sizing. How many pounds per point are we going to risk on any particular trade? It's really easy to get carried away and go with too big a trade size, and before you know it, you've actually wiped out your 1% or more. Especially if strategies are going in with very tight stop losses. A lot of people I see are doing a 5 pip stop loss on a Forex pair. For me, that's far too tight a stop loss. For example, they might be getting a 30 pip return and therefore on a 6-to-1 reward to risk ratio. The chance of getting stopped out on a 5 pip stop loss is really high. By going in with such a small stop loss, that allows them to have a much higher trading size per point. But even with a stop loss in place, if the trade is too big, slippage can occur very easily, and therefore you've only got to be 1 or 2 pips more on the wrong side and your loss very soon becomes greater than 1%. So to start with, we need to calculate our risk of the trade in pips or points, and therefore that's where our stop losses are going to be in relation to our entry point. We need to calculate how much money we're risking on a trade, and that's obviously maximum 1%, and very simply divide the pounds by the pips. So on our previous example, if we're risking 1% of a 10,000 account, we are risking $100. If our stop loss is 50 pips from our entry, it's very easily worked out, 100 divided by 50, we're at £2 per point. It doesn't sound very much, but if we are risking 1% or less, we will see consistent gains over a longer period of time and not get wiped out by 1 or 2 losses that will take the account out straight away. This is where it gets a lot more complicated if we are trading in lots, especially on MetaTrader. It is very complex to work out, and every single currency pair will have a different value. And also the value of a lot changes all the time as the price of the currencies move around. In very basic terms in Forex, one lot is 100,000 units of the base currency, and that typically equates to £10 per pip. Now if your account is in other currencies, so for me it's in GBP, you then have to convert that $10 into pounds. So on my GBP account, I'd have to take that $10, divide it by the exchange rate 1.38, and therefore it gives me £7.25 is one lot. So again, going our previous example, on a $10,000 account, risking 1% and a 50 pip stop loss, that is £2 per point. But converting that into lots, we then have to divide that by 7.25, and therefore we'll be trading at 0.27 lots. For me, that's one of the advantages of trading a very small number of currency pairs in MetaTrader. I know exactly what the lot value is at any particular time. Now, when you're trading commodities and indexes, that's all based on contract sizes, and every single one is different. So I got caught out recently trading silver. I went short at one lot and didn't realize that one lot was $5,000 on a contract size. I was very quickly exposed to far more than my 1% risk. I held on to that trade and did get out for a very small profit, but literally as soon as it got close to break even or profit, I was looking to close that out and not hold on any longer. So the most common ones for myself to trade is gold, and that is valued at £100 per point for one lot, and FTSE, one lot is equivalent to £10 per point. So if you are unsure, before placing any trades at one lot or more, I would recommend placing 0.01 of a lot and just literally working backwards to calculate what the exact value price is. The easiest way of doing this is looking at the closing price on a trade against the opening price. You can see how many points you were in profit, look how much money was made on the particular trade and dividing the two, and that would tell you exactly how many pounds per point was there, and therefore you can work out the actual lot size. Hope you found this useful. If you've got any comments, leave them below and I'll get back to you. Cheers!